Welcome to this market update and market outlook by Mahindra Mutual Fund. While we are talking about this, somewhere in April midweek, I think it's just time to review what's happened in last maybe couple of months in across the world in terms of everything, whether it is the health issues driven by this epidemic called coronavirus and the financial implications of that resolution on various steps taken by government and the economic implications on economy as well as loss jobs and employment across the world. Essentially the crisis is led started by a issue on human life, that there is a material risk to spread of pandemic and how it can impact a lot of human lives. We already seen quite large numbers coming out of multiple countries. The subsequent order impact really is that the primary solution for this health has been to do some sort of a shutdown or a lockdown on the economy, and that's where the economic problem has started, where moment economic activities are being shut down in order to allow the epidemic not to worsen by people meeting each other. The second order implication, which is the financial economy and the financial markets, have started. We've seen wild fluctuations during the month of March and even in the April first week, where markets have gone up and down materially on account of worries about economy. We've already seen major downgrades by people tracking world economy. We were talking about something like 2% world GDP forecast less than 3 months ago, and right now there are estimates talking about a minus 2% world GDP growth, which actually means some sort of a contraction in world GDP in CY20 because of the virus. Let's make it this way. If 1 month of economic activity goes down in any economy, it typically talking about a 7 to 8% implication on the output for that month. Some of this output can be covered back later on, and something need not be covered up, because not all activities can be deferred consumption. Something which is lost as an immediate consumption is an immediate consumption. Just to give an example, a movie ticket not bought is really an immediate loss, while maybe an automobile not purchased is perhaps a deferred consumption which can be bought later on. So having said this, I think let's look at what has been the policy response across the world. And what we're seeing is primary policy response from policy makers, which is a combination of government of an individual country and the central bank of that country. They are essentially doing two things. The central banks are willing to provide liquidity to support financial markets and to support government efforts, while government effort is essentially directed at improving the support system for people who are impacted by jobs. So while data for India is not yet out, but US, which is the market which typically reports every week unemployment data, we've really seen a huge spike in unemployment data for the first 2 weeks which was reported. So to an extent, there is a government effort to ensure that people who have been impacted by the shutdown should be financially supported. Coming to India specific, I think we have also done our own bit of both fiscal stimulus as well as a monetary policy support. In terms of government has clearly identified the impacted segment of people, which is more like people in the lower economic strata, and try to give them some support by way of either cash or food grains. While there are reports which says that more things needs to be done for this segment. Let's await more policy announcement. As we speak, government is considering a package for industry also. Reserve Bank of India on the other side actually did an emergency policy meeting. MPC was preponed by nearly 2 weeks, and they did announce significant relief on the monetary policy side. Let's see. The idea is that a combination of efforts by fiscal and monetary stimulus is likely to reduce the impact. However, having said that, we also need little bit of a comfort or a solution on what is the likely end game as far as the virus spread is concerned. In India, while we are talking, government has announced shutdown till mid-April. So let's say by 14th April or so, we will actually know the implication going ahead. Are we going to go into some sort of a staggered opening up of economy, or a further lockdown, or a reasonably higher scale opening up of economy? the all options are open from government perspective, and to that extent the economic implication can be worrisome or can be less worrisome. While we're talking, we've seen a reasonably large amount of outflow by FIIs in the month of March, perhaps one of the single largest month of outflow ever in the history of Indian financial markets. What we need to understand is that some of this outflow is driven partly by worries on Indian economy, at the same time partly by worries about global economic fall. So to an extent, what we really is reasonably, confident is that when the global things stabilize, some of this money will find its way back into India. Let us not forget that among all these, negative reports which we are seeing, even in the current context where people are talking about a sub 2% minus 2% GDP growth in the world, which actually means a contraction, there are still a 2% kind of range available for India. So to that extent, the historical gap where India has grown anything from 3.5 to 4.5% higher than the world GDP, that continues to remain relevant and applicable while we speak right now. We'll not take much into what's the solution etc. for coronavirus, but we can look at what we as a Mahindra Mutual Fund equity team is doing to our own funds portfolios and to navigate through these times. So there are two parts of it. One is what has been our core philosophy of managing money for people. To that extent, what we really have been a believer in is in ensuring that we investing more and more in a quality company. For some quality companies are defined by way of a product quality, something by brand presence and trust quality, something by balance sheet quality and the financial ratios. And essential characteristics of all these, quality companies is they are typically the market leaders in their own respective industry. So while we are on this subject, I can tell you that our basic philosophy has not gonna change, and it has actually helped us in handling the market volatility during these periods. One key feature of such quality biased companies is that they do not really have too much of an interest cost to worry about. They on an average are net cash companies, if you leave aside the banking sector, because banks by nature need to borrow money. So the advantage really is that even in a slightly troubled time when there is a business slowdown or no economic activity, these companies are not straddled with some sort of a debt which hurts them. Look at it from a sector perspective. While we always believe that India is primarily a financial service and a consumer sector driven economy, and financial markets will reward those sectors. We also believe that our broad sectoral philosophy has played out. While we do have made some incremental changes on some of our portfolios in terms of adding new sectors which are likely to emerge a beneficiary of this particular market volatility. So what we're seeing really is a reasonable shift away from consumer discretionary to consumer staples, from other segment to possibly pharmaceutical as a sector, where the earning visibility remains the highest. Some of these things, the way economic environment changes is quite interesting. The visibility of certain sectors suddenly starts becoming more resilient and more appreciated by markets because some other sector starts feeling the pinch of economic activity slowdown. To that extent, yes, we have really changed our portfolio vis-a-vis the current business dynamics, likely beneficiaries we've identified, and made our portfolios oriented to those sectors. But let me assure you, the basic thought process on the underlying quality of the company is not really where we have made any compromise. Across all our schemes, which is large cap, multi cap, mid cap, large and mid, etc. We've basically taken a little bit change in our thoughts on moving more towards large cap, because some of these large cap companies have really corrected well and provide us an opportunity to build our portfolios. So while we're talking all this, as I said, our endeavor is clearly to maintain the portfolio with a quality bias, because these companies are likely to navigate these troubled times. At the same time, we are also looking at opportunities which are the likely beneficiaries or the less losers in the current atmosphere, and we continue to monitor the same. That's mainly from our end in terms of this edition of Mahindra Mutual Fund Equity Outlook. We'll be happy to come back in the next edition with more updates as and when we get some more data points, part of the data points will come when a lot of these companies start coming with a quarter four results and the management commentary or management outlook for FY21. So hopefully in a month more from now, we'll have far more clarity about the likely direction of economy and the likely response of a lot of these corporates, and that will help us shape our own responses through our own portfolio actions. Thanks a lot.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.